In media news this morning, reports saying that Warner Brothers Discovery is asking bidders to submit new sweetened offers by Monday. So a lot of bankers are going to be working overtime this Thanksgiving. Rich Greenfield, co-founder of LightShed Partners. Good morning to you. What do you think these bids look like? I know you've said before that, you think that Comcast, Brian Roberts, who controls this company, at least currently, needs to do this deal. But also it appears that Netflix may be in the hunt, as, of course, is Paramount. The question is, are they going to get anything near the price tag that David Zaslav's been talking about, which is $30 a share?
I mean, look, I think it all comes down to how intense the bidding war is, Andrew. There is certainly a perception out there that there's only one bidder that can win. There's been this sort of persistent story that, regulatory-wise, Paramount's the only, approvable bidder. I don't think there's any doubt that Paramount is in a superior position from a regulatory standpoint. There's no doubt that, they appear to have Trump's clear support for this transaction. But I would also say that, remember, these transactions aren't just going to be approved by the DOJ. You won't need FCC approval necessarily, depending on how these are structured. But remember, you need states. And California and New York are certainly going to weigh in. I think whether this is a Paramount deal, a Comcast deal, a Netflix deal, states like New York and California, major production states, states that care a lot about the future of movie theaters and the movie business. Georgia's a big production state. New Jersey's a big production state now. I think the state issue is something that no one has really focused on, and I think is an important topic, not to mention Europe. So I'm not saying that Paramount isn't in the driver's seat in terms of the best positioned, but this idea that approval for anyone, including Paramount, is going to be swift. Look at what happened with T-Mobile, way back when with AT&T. Things can drag on if the states want it to drag on, and I think that's sort of not been talked enough about.
But here's the question, Rich. Let's just look at the price of Warner Brothers Discovery right now. And the question fundamentally, I think, is what price does a Netflix or a Comcast have to bid to effectively pay for whatever risk you think is inherent in two things? One is this regulatory antitrust issue, which I think probably to some degree applies to Paramount, but maybe less so. But also, you're actually probably having to pay extra for this particular business so that David Zaslav and the board of Time Warner Discovery can say, look, we're getting this amount for these assets, the streaming, HBO, the studios, plus we're also going to take the ride and the risk of spinning off the older linear business compared to a full takeout price by Paramount, which, of course, could be marginally lower. How much lower can it be?
Well, one thing I'd say is I think the whole thing versus just studios and streaming is sort of irrelevant because the value of the global linear networks, what they're going to call Discovery Global, it's a couple dollars a share, Andrew. It honestly, in the scheme of this whole transaction, it's fairly marginal. All of the value is in HBO and Warner Brothers. And in that case, I think you have three real bidders. And it does feel like these bidders are more real. I think it's existential for Comcast. I think Netflix is certainly, I'm surprised Netflix is in the hunt. But I will say that, one of the things that I think no one's really talking about, you hear, from an antitrust standpoint, Netflix would be, they're the dominant player in streaming. There's no way they could do this. But if you really stack it up, first of all, YouTube is bigger than everybody in terms of TV time spent. The craziest thing is if you put Paramount and Warner, because you're buying all of those linear networks, they're the only ones buying those linear networks. Paramount plus Warner Brothers in totality would actually be, 14+% of the entire TV marketplace. They'd be bigger than YouTube. They'd be bigger than Disney. So they'd be the absolute largest of any of the proposed combinations in terms of TV time spent. Netflix and HBO would be the smallest. Then, obviously just above that would be Netflix plus Comcast.
Rich, I'm getting told we got to go, but I have to ask this question because it's the thing I can't figure out. You have argued quite publicly that if you were the Ellisons, you actually wouldn't necessarily buy this business. You would just spend a ton to create your own library and create even more content. And my question is, if that is the argument, you think that's a valid argument, then I would imagine that you would be telling the same thing to Comcast and the same thing to Netflix.
I think on Netflix, I 100% agree. I don't know why Netflix needs this. I really don't. I do sense that there is desire to have it. For Comcast, I think, look, Peacock is subscale. They haven't been able to get, general entertainment content to work on streaming. I think there's a real logic strategically, especially with theme parks. Comcast has real strategic and existential reasons for wanting to do this. For Paramount, I continue to believe, Andrew, Paramount, if they want to win long term, they can win with or without buying WBD. But all three of these companies want it, I think, because it's for sale and it has a unique library, and they hope they can do a lot with that library. But I am certainly surprised how aggressive everyone appears to be. And I continue to believe, Andrew, just to put a point on it, that this thing's going to trade at $30 or more.